On Wednesday of last week, April 2nd, Donald Trump announced a significant number of tariffs on a multitude of countries, calling it Liberation Day. Now, whether you like Donald Trump or you can't stand him is beyond the scope of this video. In this video, I simply aim to give you what facts I can, along with my opinions, to help you make an informed decision about your investments and your future. I'm Spencer Ford, CEO and Wealth Advisor with Conservative Financial Solutions. I'm also a certified financial planner professional, and let's get into today's video. Well, like I said, Donald Trump announced major tariffs on Wednesday. As indicated by the market's reaction over the past several days, these tariffs were far more significant in their breadth and size than even the most pessimistic investors were expecting. Across the board, a tariff of 10% was announced on nearly all imports, with other countries experiencing much higher rates. Immediately, we saw markets begin to react in aftermarket trading on Wednesday, April 2nd, and the S&P 500 opened on Thursday, April 3rd, down more than 3% and finished down nearly 5% in a single day. This was the worst single-day market decline since March of 2020 during the COVID crisis. It wasn't much better on Friday, April 4th, with the S&P 500 finishing down close to another 6%. So far, it appears that we are in for another decline on Monday, April 7th. As I'm recording this, the S&P 500 opened up down a little over 2%. When reality is better than expectation, the markets go up. When reality is worse than expectations, the market goes down. And in the case of this tariff announcement, the reality is worse than expectations. Thus, we are experiencing this sell-off. But why is the market so up in arms about tariffs? Well, the fear is that these tariffs will push the cost of goods up dramatically. Companies will either pass their higher costs along to consumers, absorb the higher costs, which will lower profit margins, thus reducing their share price, or some combination of the two. The concern is that these scenarios will lead to slower growth in the economy and potentially a recession if demand is impacted enough by higher prices. Okay, those are the facts as we know them so far. Anything else you hear from me or anyone else is opinion at this point. So what's going to happen? Well, best case scenario is the United States is able to negotiate better trade deals with many of the countries that were hit with higher tariffs. Then in turn, all parties lower their tariffs, and we find that many of these tariffs are short-lived. Better trade deals, more open and fair trade, and ultimately lower tariffs will lower the cost of goods coming into the United States for consumers to purchase, and it will also lower the cost of United States goods being imported and sold in other countries, making our products more competitive and attractive elsewhere. Both would be a positive ending to this scenario. We would likely see economic growth and a rallying stock market. But worst case scenario, countries retaliate with higher tariffs of their own, and we find ourselves in a trade war. Consumers don't win in a trade war as goods continue to increase in price. If kept in effect, according to the Tax Foundation, tariffs represent the largest tax hike on Americans since 1982. They will reduce gross domestic product by 0.7% and reduce after-tax incomes by 1.9%. Basically, Americans will pay more in tax and take home less money. That's likely the worst case scenario. So what's more likely to happen? Well, truly, only time will tell. The White House National Economic Council Director has come out and said that more than 50 countries have already reached out to the president to begin negotiations. Trump has signaled that he is willing to strike deals with countries who are willing to come to the table. This seems to indicate that tariffs are being used as a leveraging tool, and hopefully we will see tariffs reduced or eliminated in the coming months. But again, only time will tell. Why now? Why is the Trump administration doing this now? Well, I believe it's for tactical reason. Imposing tariffs was undoubtedly going to cause the markets to decline. Better to have that decline as far away from those midterm elections as possible. If markets and the economy continue to decline over a long period of time, it is usually the party in power that bears the blame. That's not good for elections. I don't believe the Trump administration wants any prolonged bad headlines. Therefore, even if the tariffs aren't working as hoped for, we could see a reversal in the strategy to get the markets and the economy going again. So, what should you do? That's for you to decide, but here's my advice. If you are a long-term investor, and hopefully you are, staying the course is likely your best option. The bad news is out, and stock prices are already reflecting that bad news. The United States makes up the largest share of global GDP. We are the world's largest consumers while only making up 4% of global population. We are still the 800-pound gorilla in the room. If you're retired, you are likely still a long-term investor. You may have 10 plus years of investing still ahead of you. I'd consider that long-term. This can also be a great time to strategically look at your accounts or your investments and see where improvements can be made. Also, many families that we serve have been hoarding cash at the bank in money market accounts and CDs because of the higher interest rates that they've been able to receive as of late. This could be a great opportunity to buy the dip in the markets. So if you're still working and you're contributing to your company plan, if you can increase your contribution for a period of time, you can also take advantage of buying into the dip. So there are opportunities available. We've been through the dot-com bubble, the financial crisis, the downgrading of the United States debt, Brexit, the Silicon Valley Bank collapse, 40-year high inflation, and COVID. I'm confident that gains are still ahead of us on the other side. I hope you found this video helpful. Please don't hesitate to reach out if we can help or if you just want to talk through things. I'm Spencer Ford, and we'll see you in the next one.